And we're back with you here on the Market Day Report. I'm Marlon Bowling with you, and I wanted to run through some of the pre-report estimates with you here before we get into tomorrow, because that's when they come out at 11 o'clock in the morning. We looked at the production numbers briefly a little bit ago, so they're looking for a soybean yield of 4.28 billion bushels nationwide for the total crop, with a yield of 51.4 bushels per acre. They're bumping that up a little bit. Corn production, 15.04 billion bushels with a yield of 173.4 bushels per acre. And then if you look at the ending stocks, they're looking for corn to have 2.36 billion bushels left over on the current marketing year. Soybeans, 415 million. And the wheat at 1.15 billion bushels when that report comes out. That's the average trade guesses. Let's go to Chicago and welcome Todd Bubba Horwitz of BubbaTrading.com. And Todd, those numbers that we were talking about on the pre-report estimates, do they kind of fall in line with what you're looking to see, or do you think the trade really cares at this point?
Actually, I think the trade is priced in what they believe, and I think that, you know, we've seen this enhanced yield and this continued driving up of how much soybeans we're going to get out, but yet soybeans have not crumbled under the pressure. So I think that they're thinking that there might not be as much as stated out there, because again, you would think that soybeans would have broken down through that 940 support level, and actually they've been trading fairly well and holding up. The only concern there is their continued trajectory towards the downside with the lower highs, but they're still basically in a big range of 940 to 10, and based on what I'm seeing, I mean, they look pretty good today, up about a nickel at the moment.
Yeah, they're up 4 cents or so on November soybeans. We have January now up 3 3/4. Last trade 9.65 1/4. Now just like yesterday, though, they have traded both sides unchanged. Oh, yeah. I will throw that caution flag out there. Now looking at the corn market right now, on December, now we're down 3/4 at 342.5, but it's only been a 3-cent trading range overall from the high to the low, so very quiet in the corn. March down a penny at 352.25. I wanted to ask you, Todd, for your thoughts on how much impact the U.S. dollar is having on dragging these markets down, because the dollar really did surge ahead this morning. It's up over 500 points right now at 97.440.
Well, actually, the dollar is pushing up right up against some resistance. I think it's going to go higher, as I've stated here many times before. I believe that the grain markets have assumed this all along. I think that was what kept the pressure on them before. Now I think we're starting to see some of that relinquish. And if you take a look at corn, for example, 345 was a key level. We got above it last week for a couple of days and then came right back below it. And now we're running up against. I think more of the problem is not necessarily the dollar. More of the problem is the overall uncertainty and a lot of the things that are going on throughout the finance industry from the banks that are financing a lot of these smaller farms. They're creating a much bigger rift and keeping pressure here, because overall they're starting to make some forced liquidations and there's really not a lot for sale. We might be at low prices, but farmers, like everybody else, they understand that if they can hold it, they can try to hold out for more prices and create a little bit more of a shortage instead of having such an overabundance in the market. You know, it's no different than the oil market. I mean, oil's been able to hold up amazingly well here, but overall we're seeing some pullback, and we're not getting, you know, people are bidding and they're trying to buy, but overall they're not getting what they need because farmers are holding back a little bit, the ones that can, and I think that's the right play to make here.
Right now, November West Texas crude down just a little bit on the day, as we were showing everybody at home. Not a big move, but it was down about $0.50 overnight. Now on the wheat trade, here on the Chicago December wheat, we'll pull that up here. We're currently 2 higher at 405 3/4. The other month steadied fractionally lower. Kansas City wheat on December, if we flip over there, we're down a penny at 406. And then Minneapolis spring wheat has been firmer all week long, a penny and a quarter higher at 523.5. But that higher U.S. dollar, doesn't that tend to impact the wheat a little more than the other two?
It should. Again, Marlon, I really believe that we've already accounted for that. You know, a lot. You know, the money is usually pretty smart, and we've known for quite a while that this dollar was going to reach up. Now wheat is starting to get real volatile again, which I think is a great sign for those that own it or that are looking to buy it. Because I think what you're seeing here, we saw last week a dramatic up move followed by a dramatic down move, and yesterday we were able to pop it up again pretty good, and today we're holding after being lower overnight. I think wheat looks great. If we can get through 415 in wheat, I think there's a lot more room to go on the upside. I think you're seeing that it's been beaten down too much.
All right, quick peek at our cotton, and then we'll pause for a little break. On the cotton market, we have December now 19 points lower at 67.17. We're talking with Todd Bubba Horwitz of BubbaTrading.com, and we'll be right back. Well, we're back with you here on the Market Day Report. I'm Marlon Bowling. We're talking right now with Todd Bubba Horwitz of BubbaTrading.com. He's speaking to us live and direct from Chicago at the trading floor there at the CME Group. All right, we were talking about the grain markets and also the value of the dollar. Now I want to get your impression here of what you think might happen here in this livestock trade. That was quite a debacle yesterday on the cattle market again. Did you see that coming with a limit down close on live cattle yesterday?
Well, I didn't see it coming per se. I felt it could happen. Let's put it that way. I did not predict it, and I did not plan for it. I didn't trade for it, but it was not a total surprise. You know, I wrote Saturday that we were at pretty key levels, and if we couldn't hold 102, then we were definitely going back down to that 100 level at least. And there, sure enough, here we are. Now, one of the big problems in the cattle markets, Marlon, is that a lot of the smaller farmers are a little bit over-leveraged here, and they're being forced to liquidate out at these lower prices. And what happens when you're forced to liquidate, the buyers know that you're being forced out, so they're holding back on their bids. So it's creating an artificially bad market right now, and it's going to come back, but we're starting to see a lot of panic here, just like we saw yesterday. I think this will start to subside pretty soon. We've had a little bit of a holiday yesterday. We've got kind of a holiday tomorrow, so it makes the trade a little bit slower, but I would say later this week or whatever, we're going to start to find some bottoms here, and I would start to be looking to be a buyer here because I do see higher prices coming.
Okay, right now we were just taking a look at the live cattle market. Let's pull those futures back up here and look at December. We're now 60 higher at $100.65 after dipping down as low as $99.68 there momentarily. February now up 67, now up 65 at 101.63. And moving on to the feeder cattle trade here, we have the November contract now up 66. Trading at 120.68, so we're $1.40 off of our earlier lows, right. And we are actually exactly $1 off our high. Kind of caught in the middle right now. January feeders up half a dollar at 116.40. Quick peek here at our lean hog trade. Now this one, it was steady to weaker on the nearbys yesterday, stronger rather on the deferreds yesterday, but now we have them higher across the board. And December lean hogs, Todd, are 94 higher at 43.32. We're within 40 cents of our high of the day. Is it possible that we could finally see a low here in this lean hog trade?
I think 40 to 41 is the major key level in the hogs. You know, obviously December is usually a tough month to begin with. As you see, as we go into December, we're usually in backwardation. Then when we start going back out, we go into contango. I think that this is probably a pretty key area, and I think that the 40 to 41 level is a great area to look in to be a buyer. I think we will see higher prices, but again, December is kind of a struggle, and then you take the mess of the overall economy, you could see some problems. However, with the relationship between hogs now and beef, the relationship is 2.5 times. This is one of the widest relationships we've ever seen, so I think now might be the time to start to look to buy some hogs here because I think that range will narrow. So I think overall, okay. I think the whole complex goes a little higher.
Well, Todd, thanks for the observations on the markets. Appreciate it, and good luck trading today. Todd Horwitz with BubbaTrading.com in Chicago. Starting to see a lot of